Well, Best Buy on pace for its worst day in almost a month, and that's after quarterly financial results came in mixed. The retailer gave disappointing sales and earnings guidance here. So joining us now, UBS retail analyst Michael Lasser. He has a neutral rating on the stock and a $66 price target. Also with us, Anthony Chukumba, Loop Capital Markets senior research analyst. He has a buy rating on the stock and a $90 price target. Gentlemen, thank you for joining us. Anthony, what do you make of the quarter today? It was mixed. There were things to like and there were things to be disappointed about. How do you put it together?
I feel like Bill Murray's character in Groundhog Day. I feel like this happens pretty much every single time Best Buy reports earnings. These were not mixed results. These were good results. Comp store sales came in a little bit light of expectations, but that was against a very difficult year-over-year comparison. Operating margin was up 20 basis points year-over-year. EPS was up 19% year-over-year. Beat consensus by 9 cents. And the earnings guidance for 2019, they raised it. So I just don't really see any reason for the stock to be down 10% today. From my perspective, this is a buying opportunity. I am pounding the table with both fists.
Okay, that's a pretty strong answer. Michael, do you think the stock is down because of the exposure to tariffs? I know it could be as high as 60% of their cost of goods sold, although CEO Corey Berry tried very hard on the call to say, look, it's not going to be that high. We have a ton of mitigation strategies in effect. But is that what the market is reading for this sell-off?
The market's reading a couple of factors for the sell-off. One, as you point out, there is a lot of tariff exposure. 60% of sourcing from China means that it adds a whole lot of uncertainty to the situation, particularly for 2020, because this tariff uncertainty is going to weigh on 2020 even more so than it's going to weigh on the fourth quarter of this year. And two, we did see some volatility in the product category trends, particularly in the gaming area. That seems to be softening at a very rapid clip. As a result, they had factored in a bit more caution into their fourth quarter outlook. I would also offer the perspective that it's going to be a very difficult holiday where we're going to be stacking two good holidays on top of each other. The holiday is actually shorter this year than in the past, 6 days. So these retailers are going to have to sell more goods in a shorter period of time. And we're entering the holiday season very heavy on inventory. That's been a consistent theme across retail reporting. So we could see some of these retailers blink and make it a very promotional holiday season, which could impact a retailer like Best Buy disproportionately.
Anthony, are you unconcerned about tariffs?
It's not that I'm unconcerned. I mean, I'm more concerned about the uncertainty around tariffs than I am about the tariffs themselves. One other thing that I'll say about Best Buy is that, look, this is a company with a long track record of under-promising and over-delivering, and they have a new CFO. So clearly, they don't want to blow this guy up. They want to, have him beat numbers his first couple quarters out of the gate, particularly during the holiday selling season. One thing I'll mention on the holiday season, it's always promotional. It's always competitive. That's not new. And in addition to that, Best Buy now has a partnership with Progressive Leasing. They'll be able to offer lease to own during the holiday selling season. That will be incremental buying for Best Buy.
Michael, give us a sense, your take on how Best Buy is doing in this omni-channel world. I mean, the stock's been on a nice run since, I don't know, mid-2015, arguably. It used to be all about Amazon's going to kill these guys, throw Target, Walmart in the mix too. All of them have developed strategies to at least counter that argument. And we're talking about Best Buy now having a bad day. It's actually not about Amazon, right?
Yeah. Best Buy is helping to feed the narrative that traditional retailers, the strong, well-positioned retailers, are fighting back, and they're going to survive over the long run. Best Buy in the quarter grew its online business 17%. It offers a range of fulfillment options, including buy online, pick up in store. If you order right now on thousands of items, you can pick it up within an hour. That's a very convenient offer that's tough to compete with for those who don't have the physical locations. So I think this narrative that Amazon's going to destroy all retail is false. The real narrative should be that what's happening in retail is the weak retailers are going away and the strong retailers are getting better.
And interesting to note as well in the quarter, the online sales was the biggest quarter for a non-holiday quarter, actually, that Best Buy has put up. And that was with Prime Day. So they did compete well there. Thank you.